What's going on, guys? Nick Foy here from under30wealth.com, and today I bring to you the wholesaling guide for beginners. So this is a real estate investing strategy many of you will want to start out with when you are first getting started as a real estate investor, due to the fact that it requires little to no capital of your own money. So a lot of people face, the money problem when they're first getting started, whether they're actually facing it or whether it's a made up excuse they have. They say, I can't invest in real estate because I don't have the money. But in reality, this is one of those strategies that will get you in the door and get you started investing in real estate. So for those of you that have done the research and actually, found this strategy, good for you. There's a lot of people who will just give up and not even try to invest in real estate because they just think, I don't have any money, I'm out of luck, I can't do it. But for those of you that searched how to buy real estate, with no money down or without using any of your own money, you're going to come across different wholesaling articles, different wholesaling videos that, target those terms and phrases that people search. So you're landing on this video today, and let's go ahead and get into the guide for wholesaling. So first, I want to start off by saying that I've had my ups and downs with wholesaling. When I first got started learning about this strategy, I was a 19-year-old kid, and I was brand new to real estate investing. Wholesaling was, something I came across on like a YouTube podcast I was listening to. And so I started researching the idea more because I didn't have any money, obviously, as a 19-year-old kid. So from there, I tried actually doing it in my market. So I got on Craigslist. That's where a lot of people go to publish deals locally here. And I basically put out some ads, saying, I'm looking to work with real estate investors to try to build my buyers list because with wholesaling, you're trying to have a bunch of real estate investors ready to go that want to buy from you. So once you get a deal under contract, you can turn around and sell that deal to them at a little bit of a premium of what you're paying for the deal, or you can assign the contract rights over to them to buy the deal from you at closing for an assignment fee. So we'll get more into that in a minute. But basically, I went to Craigslist, posted some ads, had a couple that, got in touch with me that they were looking to invest in the area. They were from out of town, and they decided to set up a meeting. So we set up a meeting, kind of learned what their goals and their criteria were. I had a buddy that, was trying to learn wholesaling at the time, so he came along with me, and we were working on this together. And then we started hunting for some properties, and I pretty much had no clue what I was doing as far as finding an investment deal. I ended up just turning them in a bunch of properties that were priced really low in the city, but they also were in really bad areas. They had lots of issues wrong with them that I didn't even know about. So I was just basically saying, oh, here's a property, that I found that's $10,000 or $12,000, and that was it. I was just kind of telling them the address of the property, where a true wholesaler, you need to go out and actually analyze the full property, the full deal, run the analysis, run all the numbers, run the rehab estimates, pretty much do all the legwork for another investor. That's how you're going to get paid that fee, is by doing all this legwork, realizing it's a good deal, getting it under contract yourself, and then flipping that contract over to another investor that's on your buyer's list. So that's where you got to start out with your goals in step number one, to try to figure out, basically what do you want to accomplish in month 1, 2, 3, your first year, your first 3 years. By having your goals set, it's going to help drive you and push you to be a successful wholesaler. So in month 1, it might be, building your buyers list to 10 buyers. In month 2, you want to get your buyers list built to 50 buyers. So after building that buyers list in the first few months, then maybe month 3, you're ready to start finding deals and trying to get one under contract. Maybe by month 4 or 5, you want to try to have that first wholesale deal flipped to another investor and start profiting, in those first 6 months. So you can decide your different goals, short-term, long-term. Maybe long-term, after you do your first deal in the first 6 months, your long-term goal, year 3, year 5, is to be making $10,000 a month wholesaling properties, to have a system set up, that's churning out 2, 3, 4 different deals per month, so that you're collecting thousands of dollars in wholesaling fees. So that would be the step 1, figure out how many properties you're trying to wholesale each month, each year, kind of set some goals, some timelines, And then from there, you can move into learning how it works. So trying to learn all the different steps of a wholesale deal. So, starting off, you need to have a bunch of buyers that are lined up that want to invest in deals. They don't maybe have the time to search for deals like you do. So by you doing the legwork and saving them all the time, the research, going out to seeing the properties, running the rehab analysis, all that groundwork you're doing, that's what's going to motivate them to want to pay you a few $1,000s above whatever purchase price the seller's asking for you to buy it from them. So they're willing to kind of work with you and kind of give you some share of the profit for doing all the legwork for them. So that's kind of the simplest way I can try to explain it. It's kind of a confusing concept to wrap your head around. But basically, let's put it this way. Let's say I found, I went over here on Zillow and we found a property that was selling for $30,000. So what I would do is I would set up a showing with a real estate agent. I would go into that property. I would take a look. I would take a bunch of photos, maybe take some measurements, kind of look at all the things that I need done to the property. I'd write them down on a notepad, and then I would start calling different contractors, trying to get bids and quotes for how much it would cost to fix all those different things that I saw wrong with the property. From there, I could total up all those projected expenses for the renovations and be able to figure out what the rehab budget's going to be for that deal. And then from there, I can tag that on to the asking price that the seller's asking for the property to try to figure out the total investment if I bought the property as is right now for the asking price that the seller wants. And I can try to figure out if it would still be a good deal to flip or buy as a rental property. If not, then I would start working backwards, subtracting out all the costs, expenses to try to figure out what a good purchase price would be that's going to leave a good amount of profit. So if you've seen our other video, the flipping formula, it shows how we figure out the value of a home that once it's all fixed up. That's step one. Then we subtract out the renovations, all the costs of fixing the property up and owning that property. And from there, we could subtract out our estimated profit that we want to make the deal worth it. And that's going to give us a purchase price once we subtract all those things out from top to bottom. And if the seller doesn't go for that purchase price, we have to move on to the next deal because we're trying to find a deal we could buy at a low enough price so that it leaves us the right profit that makes sense for us. So once we do all this groundwork, then we would go to another investor. Well, first you'd have to go get the property under contract. So you talk to the seller, you'd make an offer. Once they accept it, you've got the property under contract. You don't actually own it yet. There's a 30 to 45 day window usually that it's got to go through a bunch of closing phases, inspections, title work gets run. So you've got that window now to start marketing the property to your buyer's list. So from there, you can, basically say, hey, I've got this property. Here's my analysis on it. Here's how much profit it would be. I want to wholesale it to you. I want to get out of this deal. So I'm going to turn over the rights to this contract to you for $5,000 fee or a $10,000 fee. And then you're going to buy the property at closing from the seller. You're going to still have $30,000, $40,000 of profit left in the deal, after you buy it from me and get me out of the deal. So you're basically just flipping the right to purchase that property to another investor so they can get you out of it. Or you can go ahead and close on it with the seller, and then they'll turn around and you'll close with them like 30 minutes later. So that's called a double closing. So you'll go buy it from the seller if you've got the funds to buy it, or you could work out a deal maybe where that investor wires the funds into closing for you so you could buy it with their funds, and then you would just turn around and sell it to them a few minutes later. So you'd have to work out kind of the structure of a double closing. There's more on that you could research, but the easiest way would just be to assign the contract over, to have a clause in your contract that gives you the right to assign that contract for a fee to another investor. So then the question becomes, how much can you wholesale a contract for? So basically it just depends on how good of deal you find. So there's going to be deals out there where they've got six-figure profits. Those are going to be hard to come by nowadays. But in the event that you do find a deal with a six-figure profit, like we recently found an apartment building that's going to have over $150,000, probably closer to a $200,000 profit once it's all fixed up, leased out, optimized and ready to resell. Then it's going to make us a pretty substantial profit. Now, when we first bought the deal, there was so much profit on the bone that we actually had another investor want to buy it 30 minutes after we closed on it for 90 some thousand, and we bought it for 30, like 2,000. So there's like a $63,000 profit there as a wholesale deal if we would have wholesaled it. So this is where I kind of had my ups and downs. I failed initially wholesaling because I had no clue what I was doing, but these last couple deals that we've bought, we've ended up keeping for ourselves because we're in the flipping rental property business, not the wholesaling business. We want to maximize the full profit potential of these deals. But if I was wholesaling, I could easily turn these deals over to other investors and profit, pretty substantially, like the one that we could have got a $63,000 profit. Now that's going to be rare. Like I said, most times your wholesaling contract's probably going to be $5 or $10 grand. Sometimes it'll be $2,000, $3,000. Kind of just depends, what your investor buyer list is willing to deal with you. So if you find a deal that's got $60,000 of profit, they might not mind if you ask, for a $10,000 contract fee to assign the rights to buy that deal from you. If they want that deal, since there's so much profit, they're going to have to agree to pay you $10,000 assignment fee. If they say no, you just move on to the next investor on your buyers list. So that's why it's good to have a list of multiple buyers you can turn to try to see which one's going to take you up and give you the best offer so that you can get the biggest wholesale assignment fee. So it pretty much ranges, but like I said, you can aim for 1 to 20,000. Typically, you're going to get, it's hard to get more than 20,000 because most flips nowadays only have 30, 40, 50, 60,000 of profit in them. So you're going to take a smaller slice of the pie. So you might take, 1/3, 1/4, 1/5, even less, maybe 1/6, 1/7 of the total profit, and you're going to leave the rest of that profit for the flipper who's taking on all the risk. They're the one that's actually fixing the property up, taking on the risk of trying to make it a successful flip. So I've got a book that I wrote. It's on Amazon. You can check it out, and it's called, How to Estimate the Fixing and Flipping Rehabbing Costs. So it's going to walk you through all the different components of a house, basically from the roof to all the mechanicals in the basement to the siding, the drywall, the driveways, lighting, fixtures, plumbing, pretty much all the different components you could think of that go together to construct a house. And it's going to teach you how to estimate the different renovation rehab costs for those. Or, it's good to learn those so that you can get a good idea, or it's good also to just get a contractor to go through the properties with you so they can be the experienced person that's going through with a clear point of view of what things are going to cost, since they've done lots of properties in the past and they've got a good understanding of how expensive different repairs are. But eventually you'll learn, once you do several deals and you've actually bought materials and hired contractors, you'll start to get a feel for how much things cost during renovations, and that'll help you get more accurate renovation budgets in order to give to your buyers list when you're putting together a deal you want to wholesale. The challenging side of wholesaling. So it's a simple concept, getting a property under contract and submitting your research and analysis of the deal over to another investor to see if they're interested in buying it off of you. And then they take over the contract, they go close on it, you get your assignment fee. It sounds like a simple concept, but it's a lot of time, it's a lot of hard work trying to find these deals that you can buy at big discounts, because in order to get a property that's got lots of profit in it, you got to buy it at a huge discount to its market value. So if it could resell all fixed up like as a flip at 100,000, you've got to find it down at 20, 30,000, so that you're leaving room for you to get a fee, and you're leaving lots of room for the flipper who's going to buy it off you to renovate it and still profit 20, 30, 40 grand. So anywhere from 50, 40, 30% of the ARV, that's probably the purchase price you need to aim for, so that you can end up flipping it over to another buyer at 50, 60% of the market value and leave yourself a little spread there. So these are just some rule of thumbs, though. You can run the math and kind of see how it breaks down for you. One of our properties that we bought, we got in it at about 30 or 25% of its market value. I think we bought it for 30,000. We got it around 30,000, ended up selling for 120,000. So if you do the math there, 30,000 divided by 120,000, we got in at 25% of its ARV. That left 75% there as a profit spread. But then that got dwindled down once we did our renovations and all of our different costs, and we ended up still making a pretty good profit. But our going in price was 25% of the actual after repair value. So we got it at a pretty steep discount to its market value. So here are some possibilities for motivated sellers. So you're going to be thinking, okay, how can I find these deals that are huge discounts? Well, these are going to be your motivated sellers. So these are people maybe that just lost their job. It's unfortunate for them, they lost a job. Now they're going to probably lose their home. So you're actually doing them a favor, coming and buying the property off them, getting them out of the property so they can pay off their mortgage with the proceeds from the sale. In some cases, if they're underwater, it's going to be called a short sale. So you're going to have to talk with the bank and get the bank to okay accepting a purchase price that's below the loan balance that's still owed on the property. But in most markets right now, home prices have been going up. So a lot of people should be, above water. In other words, profitable. So once they pay off their mortgage, they should be able to come away with a small profit. So job loss, once they lose their job, they can't make payments on their mortgage anymore, so they're going to be facing foreclosure. So you're going to be helping them out, get out of their situation. There's also probate properties, so ones that have gone into estate sales, so family members that passed away. That's how we actually bought our last deal, the apartment building. The widow, unfortunately, her husband had passed away, and the property went into an estate. So she wanted to close the estate and get it, over with so that she could collect the funds from the estate and get that all taken care of on the legal side of things. So she decided, she was real motivated and sold the property to us at a really low purchase price. And she, wasn't mad at all about it, didn't feel like she was getting ripped off. She was actually happy that we were buying it from her. It sat on the market for a while. Nobody was offering on it. So that's when we decided to make a lower offer, and she decided to accept it. And, that's one of the things a lot of investors feel guilty about, buying properties at such low values. They think they're ripping off the seller. But you got to realize people's situations. In some cases, you're actually helping sellers, and it's a business. I mean, you've got to make money. And if it means, hunting deals at low prices, then that's what you got to do. Unfortunately, that's, how you're going to build your wealth. If you can do it ethically, as ethical as possible, you want to do that. But if somebody's willing to sell you at a low price, they've made up in their mind their reason for why they're willing to accept that price. So you're not really ripping them off. They've decided they wanted to sell at that price, and they've accepted your offer. And like I said, a lot of times it relates to job loss or an estate sale, or they've got some big motivation, whether it's a divorce or they burned out as a landlord. So there's going to be different reasons that you're going to need to find out why this person wants to sell, and that's going to help you work out a deal with them so you can get them out of their situation. It's a win for them, and then it's also a win for you, getting it at a low price that's going to leave profit on the table. But most of the deals I've bought that have been super low priced, it wasn't because anybody was getting ripped off. It was just because those properties were in terrible condition. That's the big reason a lot of properties sell for pennies on the dollar. The owners don't want to spend the money fixing them up. They'd rather just price it low, get rid of it, and let somebody else come in and take on the risks of fixing that property up, because there might be a lot of things that get uncovered that lead to an expensive renovation that could end up putting a flipper underwater on the deal. So people would rather just, sell it at a low price and not worry about the hassle of trying to fix their property up. So all the deals I've bought so far have needed major renovations, pretty much stripping it down to the bare floor and the bare walls, and just restarting, putting in brand new floors, brand new walls, all new fixtures, all new appliances. We've had to totally go in and do gut rehab jobs. Step 3, build your real estate investing team. So these are going to be people that help out in your wholesaling business. And the first stop is a real estate agent. This is going to be someone who can help locate deals for you. But it's going to be competitive because they're going to be finding deals on the MLS that every other investor and wholesaler is looking at as well. So you're going to need to start hunting for deals off market, finding motivated sellers, contacting landlords to see when and if they're ready to sell their rental properties, if they're getting burned out, looking up different stuff in the public records to find out people that are falling behind on mortgages or on their property taxes, or you can find out vacant properties that haven't been being taken care of. You could find the owners and mail to them. So there's different ways to find off-market deals that haven't come on for sale yet to beat out the competition, so that you don't have competing buyers driving up the price of the property, because that's going to cut into the profit spread that you're not going to be able to make as big of a wholesaling fee. The attorney is going to help draw up the different wholesaling contracts for you, the purchase contract, so that it's got that assignment clause in it that allows you to assign the rights to that contract over to another buyer so that you can get out for a wholesaling fee. You can find an accountant who can do all the tax stuff for your business at the end of the year. You can find contractors to come in and give quotes for jobs, maintenance services. You could get lined up so that the next investor coming in can turn to these guys to do the work for them, or they can do it on their own if they've got their own contractor crews. But at least it helps you run the rehab budget estimation so that you can get a clear picture of what costs are going to be when you're pitching a deal to another investor. Then they've got property manager, title companies. So these are other parts that, play a role in the investing team. Lastly, you can set up a website. So this is a good way to generate leads. So if you're trying to find motivated sellers, you can, have different pages for different types of sellers. So you could have one set up for divorces, one set up for estate sales, one set up for burnt out landlords, all the different reasons people might be selling. You could set up different web pages that target those keywords and that target your local real estate market keywords. So, motivated seller Kansas City or motivated seller Miami, Florida. You could type those into the page. When people type that into Google, how to sell my home by owner in Kansas City or in Miami or in DC, whatever phrases people are typing into Google, you want your website to come up first. They'll click on your web page that is, targeting those keyword phrases, and that's how they're going to get onto your website. And then on that web page, you could have a form they fill out, giving them different information, what's their property address, how many bedrooms, bathrooms, square footage, what their situation is, so you can learn more about why they're selling, things like that. And that's how you can capture leads on the internet. Or you could also run Facebook ads that people see on their Facebook feed, and then that drives them back to your website page where you've got that contact form they can fill out so you can learn more about them. And then you can have a phone number hotline set up they could call as well that's got an automated system, automated message, so they can leave you a message, and then you could check that automated hotline every day, your voicemail basically, and you could get back with all the different phone calls that you received all day. Once you've got more information on the property, you can do some research before giving them a phone call. That way you understand going in what kind of property you're dealing with and what kind of purchase price that you need to offer them. So that's, kind of the gist of the wholesaling guide. Lastly, you need to start finding deals. So you've set up your team, you've set up your company website, you've set up your marketing systems. So now go out there, start finding deals. Look through hundreds of deals before you find that one good deal. It's going to take a lot of work, a lot of research. If you break it up though, looking at 10, 20 deals a day, by the end of the week, you could have gone through, over 100 deals. So don't let the number seem, huge. If you break it down into step-by-step phases, it can seem a lot smaller. So if you look at 10 deals today, 10 deals tomorrow, 20 deals the next day, it adds up by the end of the week. And you'll have looked through lots of different deals and analyzed lots of properties for sale in your market. And before you know it, by the end of the month, you might be all caught up with all the inventory on your market. You've looked through all the different deals within your criteria range that you're searching for that matches your investor criteria. So that's the other thing when you talk to your investors, you want to know what types of properties they are interested in buying in. Since they're going to be the ones turning around buying it from you, you need to find properties that match their criteria. So once you've got different criteria for different investors, you could start grouping them into different buckets. This person's looking for 3-bedroom homes. This person's looking for apartment buildings. This person's looking for studio apartments or studio condos. You can group these people into different buckets, and then you can sift through these different deals and send them to your different lists by segmenting your lists into groups. All right, and then part 2 of this video is going to be how to actually analyze a real estate investing deal for wholesaling. So we've pretty much covered the basics of it, so I'll just run through the steps briefly. Step one, always got to start off determining the after repair value. This is what you can expect to sell the property for once it's all fixed up. So they might be buying it off of you to hold on to it as a rental, but you still need to know what it's going to be worth if they were going to sell it as a flip. That way they can see how much profit they've got built into it already if it's a flip, and then they can add on to that profit by calculating the annual return it's going to make as a rental property. So combined, you're going to have flipping profits plus rental property income, and that's going to add up to a lot of profits over the time that they own the property. So they're going to have some initial equity built in, plus they're going to keep piling on to that profit they're going to make on the deal. So that's what happened in my deal that turned out to be a 6-figure deal. Our initial equity profits as a flip was about $75,000, but then from all the rental income that we earned over a couple years of renting, plus some other financing interest that we're earning from giving the seller a loan, we ended up earning over 6 figures when you add it all together. So by knowing the after repair value, though, this is what you're going to be able to turn to them and say, all right, here's the resale value of this home. Here's your expected profit once you buy it from me. Then step 2, calculate all the repairs. This is going to help you figure out, how much renovations this investor is going to need to do to the property, what work needs done. So they've got a clear scope of work and game plan. So once they take over the property from you, they already know what to expect ahead of time, and they can start getting those repairs made right away. So this is going to make your investors happy when you do this legwork for them. They're going to be more willing to give you a bigger wholesale slice profit, because without knowing the repairs, it's going to be kind of risky to them. They're going to say, well, we don't know how much the repairs are going to be, so I can't justify paying you $10,000 right now because I might have lots of repairs. Well, if you've already done that legwork for them and show them, here's the estimated repairs, so here's how much you're going to profit. Now they're going to say, all right, you're estimating I'm going to profit $50,000 on the deal. Okay, I have no problem giving you $10,000 of wholesaling fee, because I'm still going to have $40,000 left to profit. So that's still a good chunk of money I'm going to make. So then you got to make the seller an offer. So go ahead, submit an offer to them. And basically, if you're submitting a lowball offer, you could justify it by telling the seller, hey, I've done my research and analysis. In order for this deal to work for me, this is the price I've got to buy it at, because I'm trying to make a return on investment, and here's all the risk I see I'm taking on. Here's all the expenses that I'm expecting to pay for renovations on the property. Here's my holding costs. Here's what it's going to cost me to resell the property down the road. So in order for me to come out ahead and not lose money on the deal, this is the purchase price that makes sense for me. And if you explain things clearly like that, the seller's going to be understanding, because they're going to see the math and the numbers, and they're not going to be, upset with you for trying to lowball them. But you don't necessarily have to show them your expected profit, because if they see you're trying to profit a huge amount of money, then they're not going to want to come down in price. But if you show them the expected costs and things wrong with the property, saying, hey, it needs a new roof, that's going to cost me $8,000. It needs a new furnace, it needs a new AC system, that's going to cost me $5,000. If you show these different things, it's going to help make your point of why you're bringing down the purchase price. So then we got, the basic formula. We start with the ARV, subtract out the repair costs. Then you got to subtract out the flipper's profit that they want when they go to sell the property. Holding costs, this is like if they're getting a loan on the property, they're going to have to pay utilities, taxes, insurance, all that stuff while they're renovating it. You're going to have closing costs when you go to sell. This is going to be like your real estate agent, commission, title work, all the different costs that go into closing on a real estate transaction. So once you've got your total costs, you could subtract it out from the ARV to figure out how much profit is left in the deal for the investor you're flipping to. And then you could charge your, profit or your assignment fee. So you can justify that if you're able to buy the property and it's got $80,000 of profit in it, then giving you a $5,000 profit isn't going to be a big deal for that investor. They're going to gladly agree to give you a $5,000 assignment fee. And then you can run the numbers to kind of see what percentage it works out to be of the ARV. So in this case, if you end up asking $75,000 on a property that's going to sell for $150,000, you're trying to buy it at 50% ARV. That's pretty reasonable. Like I said, I got my property at 25% ARV. I bought a $30,000 property that was worth $120,000. So that was a 25% ARV deal I got going in. So then step 4, get buyers to wholesale too. Ideally, you should spend the first few weeks and months just learning the game, trying to build a buyer's list, trying to analyze deals. And then once you've got this list of buyers ready to go, then you'll be able to actually start making offers on deals. It'd be a bad situation to make an offer on a deal and then try to go out and find a buyer for it. You need to have buyers lined up ahead of time. That way you don't end up getting stuck having to buy a property from a seller or breaking a contract with a seller, which could have legal ramifications if you're not able to break that contract legally. So by having a list of buyers to go that you can turn to, that's going to save you a lot of headaches. You can just start marketing the property immediately once you get it under contract with the seller to your buyers list until one of the buyers steps up and agrees to sign the assignment contract with you. So step 5, you're going to collect your $5,000 wholesaler fee or however much you negotiated in your assignment contract, and you're good to go. You've just successfully completed your first wholesale deal. So that concludes this guide to wholesaling. This was our in-depth tutorial. Lots of text here, and if you enjoyed it, make sure to hit these share buttons down here below on the article if you check out the article yourself. Again, I've linked to several resources throughout the article. You could check out different guides to creating your website, different guides to analyzing the costs. I've got my rehab book I wrote that's on Amazon you can check out. If you just search my name, Nick Foy, on Amazon, it'll pull up my different ebooks. But we've gone through all the different steps to wholesaling. If you want to get more in depth and actually take that next step, learning, how to find deals, how to find financing for deals, how to set up all the legal stuff in your business, all the things that I cover in my real estate investing course for beginners. We're going to learn the basic fundamentals of investing. So go ahead and check out that course here, or you can also click it. It's the first link in the video description below in the YouTube video. And I want to thank you again for giving me your attention, for your time, and finishing this video today. Make sure to hit that subscribe button so that you stay tuned for weekly uploads. Turn on notifications and hit that thumbs up button if you found this guide helpful as a beginner.